Very good. Welcome. Sorry for the little mix-up yesterday. A little mix-up in the schedule, but we're here today, and welcome. So, for some of you that are maybe new to what I do here at FX Street, we always incorporate the same strategy, and the strategy is really to quantify real supply and demand in the markets. Specifically, how do we find significant demand and significant supply? As that's where we want to buy and sell. What we really want to focus on are two things. Where are the supply and demand levels? So we can buy and sell at those levels. Number two, where are the big profit zones? So it's not just where are supply and demand zones, it's where are supply and demand zones that are kind of far apart from each other. So, I've been in the trading business now for about 22 years, and I've been doing it quite a long time. Started my career on the floor of the Chicago Mercantile Exchange back in the heyday of floor trading, and I actually started in the currency. So there were two floors back then at the CME, and upstairs was the currencies, and that's where I was at. So it was, but I saw who was making. I had a kind of a really neat experience in the beginning for a lot of reasons. But one of them was I saw who was really making quite a bit of money, and who I wanted to kind of, model my trading career by. Now I do a few different things today, but one of the things I was really turned on to back then is there were a few groups and a few people that would put in orders once in a great while, and you'd forget about these people. And I'll never forget this one guy. His name was Oscar. I was so impressed by this guy, and I didn't know what I was doing back then. This is kind of way in the beginning, but I remember, you talk to the same people, banks, institutions, fund managers, putting in orders every day. My job was to facilitate those orders, big multi-million-dollar positions in the markets. But I'll never forget this guy Oscar would call up once in a great while, and you'd forget about him. And he'd put on an order. He'd put on an order in the yen, like we're looking at here. He'd put on an order in the Swiss, and then you kind of forget about it. But then he would call up, a few weeks later, or a couple weeks later, or what have you, or a month later, sometimes, and he would either move a stop or take profits on a trade or something like that. And it was that second phone call that just blew me away, because I'd say, oh, yeah, I remember this guy. And I'd look up his original order, and I'd facilitate the order he was giving me then. And I'd be like, wow, that's a lot of profit. I'm like, and I remember telling the guy that ran our trade desk, I'd say, the bank, whoever this guy works for must be really happy. That's a huge trade. And I'll never forget the day that what my buddy said the first time. He said, no, he doesn't work for a bank. He trades for himself. He's just really good. And I'm like, wow, that is amazing. I'm like, I didn't know an individual back then. I was like 20 years old. I didn't know an individual could make that kind of money. But it was fascinating. It was great. And, as a young 20-something, I said, I want to be like that guy. So it was, all he did was longer term position trading in the FX markets. He'd put on positions generally the right time, and he'd get out of them generally the right time. Never perfect, never the exact high or the exact low. He made an amazing. I never met the guy in person, but I remember some of his trades were just phenomenal. He'd lose once in a while, but it was nothing compared to the profits. So, what we go over here is where are banks and significant buyers and sellers buying and selling? And what does that picture look like on a price chart? What we want to start this session off with is going over that picture on the larger time frames. And we've been doing these sessions. I've been doing these sessions at FX Street for years now, and and I see through the feedback it's working for a lot of you, and some of you are just getting started. And I'm definitely going to be here for you again this year, and want to really put even more effort into you guys this year, and make sure that more of you even get it. Okay. So, but what I want to add to it early on this year is not just the short-term trading component. We spend so much time on that, and it's great, and we will. But I want to make sure we kick the year off with some, just if you remember our first or second year at FX Street, we did focus a lot on, we focused on the short-term trading a ton, but we also incorporated the longer-term trading. And let's try to focus on some of those positions this year, and let's see how the year plays out. We've got some great opportunities to start with, so I want to go over those today, and we'll follow up with those throughout the year. So if you've got an account size that can take a chance on one or two of these longer term plays, you really might want to consider it. RFK, I see your post there in the chat. So a banker institution, and that, again, I started on that side of the business. They make decisions no different than any other big retail store or anybody else. Wherever they get, where the bank gets, is able to buy yen, their goal is to sell it at a higher price, right? Wherever they, it's really no different. Just like a car dealership or a retail store, wherever they're able to buy they want to buy at wholesale prices, and their goal is to sell higher at retail prices. They need to make a profit. A bank needs to make a profit like any other business, right? And they have shareholders they have to report to just like any other business. Okay. So let's start with the Japanese yen, and we'll move to the actually, why don't we start with the dollar? So that's kind of one of the major governing currencies around the world. So the dollar is the chart every year that we really, these levels that you see on the chart here, we have these in every year. We kind of don't even, should take some of them out, but I know we've got some supply zones sitting well above here. Let's take a look. There they are. So right now the dollar is sitting in the 92.25 to 92.50 range, right? Okay, if I scroll left, we see sitting just around, call it 94 to 94.50, and then 96.50 to about 97.50. We have a couple supply zones sitting up there. Now, they don't look like supply zones, so let's go down to the daily chart and you'll see why they're significant levels. We'll go over the demand side next. So if I scroll left, okay, so there's one of the supply zones there. This is that near-term one. Now, we already have a retest into it, and that retest went almost halfway into the level, so we're going to be a little cautious there, but I'll show you what we'll do. Okay, so remember, inside this level, this yellow box here, there are multiple price points. This isn't just, this supply zone doesn't represent one price point. That's the whole point of the zones. So, it represents multiple price points. As you can see in this pullback, price went all the way up to about 94.15, right? So that means, I'm going to move my line up there. So that means the orders sitting 94.15 and lower have already, some of the sell orders here have already had a chance to be filled with this first pullback. However, above that, there's been no, none of the orders above that had a second chance to be filled. Okay, so we'll go, call it 92.10 to 92.50 would be our next zone. Okay, so that's the dollar. And then, of course, sitting up here in the, call it 96.70 to 97.50 is the supply zone above that. And for those of you that have been with us for a few years, again, not patting ourselves on the back, but we haven't had a hard time picking the long-term direction in the dollar. I think we've hit it, all the major turning points every year for about 3-4 years. And again, it's not patting ourselves on the back. It's not that hard to do. What I'm encouraging you to do this year is, focus on some of these longer-term plays. And boy, once you get a taste of one, you're going to fall in love with it. We do have some demand sitting below current price in the U.S. dollar. 'Let's go to that here. that one. So obviously that comes in around 90 to, you need about an 89.50 stop on that one. Okay. And again, most of you are not going to trade the dollar when prices come into one of these supply or demand zones. You're going to probably be looking at the euro or yen or pound or some opposing currency, right? So having said that, let's go to the yen. This one I think will be kind of a quick one. We do have a really nice supply zone sitting above current price. We'll go to the daily chart for that. I think we're going to use the daily. No, we're going to use the weekly, sorry. In our next session together, we'll get back on the onto the short-term trading. Oh no, we did have. Is that the daily chart? Oh, I'm sorry. There we go. So if I put a horizontal line across current price, I'm sorry, not current price, but the high here, right? I'm only doing that for a reference point. I'm going to scroll left. I'm going to blow this up. You'll see that we're right into this really nice supply zone here. We just basically touched that level and fell. So if I go up to there, it's about 121.90. So this is just, all this is saying is pretty much just any trade above this recent high. Look at how prices just touched that line and collapsed. So what does that tell us about the supply-demand equation in that zone up there? Small imbalance or big imbalance? Yeah, big imbalance. Exactly. And two things tell us that. Number one, the fact that price just touched that level in turn. Number two, that it really collapsed from that level. Remember, we're looking at a daily chart here. Had a couple more attempts to come back there and couldn't. So now I don't know for sure that this trade's going to come up. There's a good chance it will, but anything above 121.80 in that zone is looks to be very shortable and looks to be a strong short. We're also setting up for a potential bull trap here, which adds I'd say adds to the trade, adds to the probability of the trade working out well. The reason for that is if prices come back up to this level and go above this high, is that going to be bullish or bearish for most traders? How are most people going to view that? Even some bigger fund managers, yeah, most people are going to view that as bullish, right? The break of a new high, it's a very bullish signal to novice traders. Right. So a bullish signal into a price level where you clearly should be selling because those are clearly retail prices is we want to be the seller. If we're able to sell short up here, what's the potential move? Well, we already have evidence that there's no significant demand until 115.53, and then of course down in here we'd expect some demand. But I would say the ultimate target is probably more like down here. Okay. So let me put this zone in, and then I'll put a blue line in here. And again, we're gonna monitor these throughout the year. Okay. So we would want a target sitting just above that level. I'm gonna put it right there, just above where all the kind of the hesitation started. Okay. So not in here, because if you go to a smaller time frame, you're gonna see there's some demand in here. Go right up here for a target. Okay. And again, just some more evidence so you know that these are very possible. Again, for those of you that have been with us for years, you know that that we've been, according to the supply demand strategy, we've been very bearish gold for probably about 2.5 years now, okay, and still bearish gold. Okay, so that's our opportunity in the yen. Remember, on smaller time frames, there are plenty of more, there's plenty of levels inside all this. Plenty. But today, the purpose of today's session is to focus on, longer term trading. The other thing I want to introduce to you, not in this session, but an upcoming session, so we can take advantage of it this year. Another thing we do at Online Trading Academy is the one thing we'll never do is take a breakout trade. It's a very novice move, right? We want instead, if you have a supply or demand level, prices at some point broke out of that level. So we'll get in on the retest of that level if it scores out high enough with our odds enhancers. But the other thing we'll do sometimes is anticipate a move. In other words, while price is basing sideways, sometimes we'll be able to get into, we'll enter a position before breakout. In other words, not waiting for prices to break out, but getting in well before the move happens, okay, when prices are just kind of sitting there. The way that we anticipate this is, again, right at the heart of core strategy, supply and demand. So, for example, if we're coming, if we have a demand zone and we've come back to that level a number of times and we've actually gone all the way, deep into the level, the next time we come back to that level, if prices are just basing in there, 8, 9 times out of 10, you're about to move lower simply because there's no more buy orders there. So that's the type of scenario with a big profit zone below. We'll enter that position before the breakout. So I'll incorporate that into maybe one of our next sessions, so we can start to just another tool in our trading toolkit, another way to enter positions. Okay, let's move on. So that's really so we've looked at the dollar. We've got our supply and demand there. We've looked at the yen. Huge opportunity there if we can get a little more of a rally in that market. Let's move on to another market. We have plenty of time to get to quite a few markets today. Why don't we take a look at euro? So most people are aware of what the euro's been doing. Now, again, if you remember the last pretty much 6 months or so in the euro, if you've been with us, we've been pretty bearish, right? Now, why have we been pretty bearish? It's a pretty important point. Why have we been so bearish in the euro? Because of a lack of demand, right? Remember that? It's not so much that the supply was just outstanding. There's great supply levels now above current price. Remember, our whole point was, remember all these big pivot lows here, and then these pivot lows here, we've pointed those out. Those are not demand zones. In fact, we don't expect price to stop at all at those levels. Up here, they didn't stop at all. Down here, you had a little hesitation, but ultimately went through it. Because you would expect that. These are not the picture of significant demand. These are the picture of no more demand, just the opposite. So we need to find some demand below current price. The weekly chart is not going to help us with that. The weekly chart will help us on the supply side. Okay. So let's go to the daily. And I think you'll see we do have some demand below current price. So I'm going to put a horizontal line across the low. We're going to scroll back. And that line is just for a reference point. So I want to scroll left until we hit price. Let me just read back here. Ross, I see your question. Let's see. Yeah, no. So when we get to, so we want to stick to this bearish move until we want to keep selling rallies in euro until we get to an opposing, keyword there, opposing larger time frame demand zone. Once that happens, then we change our larger time frame view and become buyers, right? And that's when profit zones will open up on the upside. And as far as short-term trading, how you incorporate short-term trading into that, it's the same thing, right? Until you get to larger time frame demand, the chart is not going to offer you low risk, high reward opportunities on the long side. You just won't be offered those. Even in the smaller time frames, you won't be offered too many of those. But you're going to be offered, low risk, very high reward shorting opportunities. Yeah, Carla, pivot points are just those are pullbacks into levels already. That's what they are, right? Just look at just looking at them. There's a pivot low, pivot high. Those are pullbacks into supply and demand zones already. And that's where conventional technical analysis, there's a lot of flaws in that school of thought, but that's one of the big ones. Is the average person thinks pivot highs and lows are support and resistance levels according to the trading books. So that people buy and sell at those levels. Well, actually the opposite is true, right? Those pivot highs and lows are telling you that, those are movements, that's price moving into original supply demand zones, eating up those orders, filling orders. A series of pivot lows into a demand zone means that there's less demand, not more demand. That's why we expect price to go right through those areas. And you'll see it almost always will. So we're on the daily. We're going to scroll back. Sorry, I got a little sidetracked there. But again, the goal of these is both find opportunity and to a profit. So we run into this area right here, and this does not represent significant demand to us. So it wouldn't meet the definition according to our odds enhancer. So we pull the line down to the bottom of the area and continue to scroll left. And then we come to this area down here. Is this area demand? Is this significant fresh demand? Carla, how about you? Is this significant fresh demand? This area I'm pointing to? No, notice, look to the left. This whole thing, which most people would look at this and say, wow, that's a great area, let's buy. No, that's a pullback to that. It worked out great. But there's probably no more buy orders left. Not fresh. Exactly, Abraham. Not fresh. So the nearest area that that would even remotely qualify is this area right here. I know it's quite a bit lower, but that's okay. And again, we're looking at larger time frame stuff. Believe me, there's plenty of small time frame demand zones between, above this level but below current price. So I'm not saying the euro can just free fall to this level. I would expect it to come down here. It could come down pretty quick, but nevertheless, the area where we would expect a turn higher is down in here. Okay, and also too, with if and when the euro gets down here, it'll be far from those larger time frame supply zones. The other thing, if you remember the dollar supply zones, okay, those are a bit higher, right? Those aren't that close. So dollar hitting the dollar supply zones are not too far away from this euro demand zone. Does that make sense? Okay. So now on the supply side, notice when you're looking at the daily, you don't really have much until we get to about 120, closer to 122, 120, 180. Okay, so now you're looking at the euro with some pretty strong volatility. In other words, the path of least resistance up or down is getting pretty wide. In other words, there's lots of room for euro prices to move now. your constraints are not there like they were at other levels. Why don't we go to the Aussie dollar? Again, let's start with the weekly chart. So now we're down at this pivot low, and you're getting a little bit of a bounce. Would we expect the Aussie to have a significant turn from this level? Your average retail trader thinks so, but we probably would not. If you're following the supply-demand rules, this is just a pivot low, which means you've been here before. So we'd expect prices to continue lower, but continue lower to where? So for that, we'll go to a smaller time frame. Obviously, we have our key supply above. Let me put that in right real quick. That's pretty far from current price. We won't spend too much time there. You have kind of level on top of a level in here. Okay. There's that. That's actually a bigger level than that, but we're just combining with this bottom one. So you kind of have two levels sitting on top of each other there, where the chart is telling you have just significant banks aggressively selling the euro up here. So certainly we would use that as a target and or entry point. But now let's go down to the daily to find some demand below current price. Let me go to the other chart. So there's that. Let's scroll left. And, oh yeah, this is inside if we get looked here. Let's see. All right. Okay. All right. You know what? I forgot about this one. I saw this earlier today. This is not a bad level at all. So all right, so price just touched that area. If you came back down into that area and made a new low into that level, and let's make sure that the US dollar is into some kind of supply, I'd be okay with buying that there, but your profit zone is limited here. That's the challenge. So you're not looking for a huge move. I mean, compared to a short-term trade, you're looking for a huge move. But this is not a, hundreds and hundreds of pip move like some of the others we're looking at. Right, because you're going to come into this area up here, the 8290. So you'd have to get out of your position somewhere before that. Okay, let's move on. Again, I can go to any market. I'm just kind of going down my list here. So if there's a market that's really important to you, okay, we'll go to the Swiss or the pound. We can go to the pound. Let's see here. Okay, so if we look at the 156, all right, obviously there's some supply there. Pull up the weekly. Again, we're coming into this area with all these just pivot lows. So we've got fresh. This is a great example. We have, really nice supply above. Notice supply. The chart is telling us the risk of the pound, going significantly higher anytime soon is very low. You've got those ceilings of supply sitting just above, not one, not two. You've got three good ones, especially when we go to a smaller time frame, you'll see them. On the downside, we've got a bunch of these pivot lows here. So price has been here before, and so there's probably not many orders left. So we go to the daily chart. There's some old lines. We get those. Put it in our horizontal line and scroll left. Okay, there's those lows. Let's go down here. Let's keep scrolling. Okay, so, down in here, on smaller time frames, you're looking right around 148. You'll see there's there's some demand down here. And that would put price below those pivot lows, which is what we want. Okay, so we're far from that now. We can come back to the pound at our next session, but I'm going to be very interested 148 and just below that. When I scroll right, you'll see it's fresh. We haven't been there, so we'll wait for that to happen. Gold, yeah. Let's see if my line levels are saved here. I'm not on the same computer I always use. So we've had let's see. No, this is the old one. But we'll put those levels in. Our target for gold, and it's nice we're getting a rally here, so you could put on a short position. Get a short position out there. Target for gold is right down here. Really have two levels sitting on top of each other here. This is the first one. And the reason why we've been so bearish for literally a couple years, a little bit more than a couple years now, is because there's if you look at the chart, it's the same. And we've had the same talk, here for years with gold. There's really no fresh demand on the way down. So our target, we've just been in short rally mode and still are, has been down in here. Okay. Here's the first, even when prices were up to, 1,800, 1,900, that's, I remember at 1,800, we were saying, look, there's no fresh demand until you get down closer to 1,000. This comes in at 1050. So we haven't gotten there yet, but let's see if we can find some quality supply above current price. Let's bring the contract shifted, so you're seeing some old lines in here. Shifted price. We're going to go with this guy right up here. Okay. So staying in short rally mode, we're looking at 1266. Oops. 1266 to 1270, called 1280. So you need to stop a little bit above that. Now we're looking at COMEX gold futures. So if you don't trade that market, don't just jump in and start trading this one. This is a pretty big money market, $100 a point. So just be careful with that. There are other ways to trade this market. You can look at GLD, the ETF. And I know there's been a lot of, especially over the past couple of years, that there's been a lot of talk of just, buy gold, and you've got the stores all over, and everywhere I go in the country, you see these stores, cash for gold, and but I'll tell you, the chart hasn't been telling you that. The chart's been telling you short rallies. All right, let's keep going. I saw someone a little bit ago wanted, hang on a second. Let's take a look at New Zealand. Okay, so this one, this market's just been going kind of sideways in the big picture for quite a while. So we're going to quickly go to a smaller time frame here. And what we need in this market is it's been for a few months now. We need to get out of this range. When you get out of this range, you've got some very tradable levels. That's going to be your first supply zone above current price. To me, the range. I see your comment focus. To me, the question, the range means just stay out of this market. There's, why get chopped around in a market like this? We need to get out of this range. Then what a range does is set up very nice bull and bear traps. In other words, if you break out to the upside here, people will get tend to get very bullish, and price will just go right into a supply zone and typically turn lower, right? It's that combination of everybody has bought, and you're at a price level where supply exceeds demand. That always leads to lower prices. If we go below current price, we're going to have to go kind of quite a ways back to find any supply, so any significant demand on a larger time frame. So again, the theme of this session today is, where price is going in the next kind of few months or first half of the year. And when you look at this market, the lack of demand below, the supply above, it's telling us that for the foreseeable future, the upside is capped here and shortable. Okay. Sure, let's take a look at crude oil. Now, remember, we were looking at this market a while back, and we talked about this area down here. But remember, we said be careful with this one, because if you look at all the wicks to the downside, that tells you that there really can't be any demand in here. If anything, the demand is below that. And now price is sitting just below that. So when we go to the daily, so let's do the supply side first. We'll do demand in a second. I was kind of just leading into demand, but let me just get the supply levels out there. Because the picture that's being painted is, even if we do bounce at the demand below current price, I do not see oil prices higher anytime soon, as you've got quite a bit of supply sitting above. Again, very, very shortable rallies. Now, we need to, I'm going to put a horizontal line in here again, and then we're going to just scroll back, and that's just a reference point. Want to see where that line hits price and look below that. Okay, so there it is, and we look below that. Where's our next kind of tradable bounce? It's going to be sitting right down here. This is where Okay, so that comes in about 39.85 down to about 37. Okay, so about 37 to 40 is that range. Again, we're looking at larger time frame. So that's about 4.5 points lower than where we're at now. So if prices did get down to 40 and you've got some supply, so the range over the next, month or, maybe month or something or so is likely to be between 40 and 47. Does that make sense? Now, again, I love trading crude, and typically the trades that I take are shorter term trades in crude. But whether you're short term trading or long term trading here, just be aware that that range in the bigger picture is likely to be around 40 to 47. That's what the chart is telling us. So if you trade crude oil, that's pretty key information. Right? Again, I noticed some people came late to this session, so I want to go back to one of the markets that we started with, just to make sure you have this one. So we went over quite a few markets today, all larger time frame. And one of the big ones is, I should say, one of the big opportunities is this dollar yen. So if we can get back up to about 122, it's a really nice supply zone up there with plenty of odds enhancers. And you really don't have any larger time frame significant demand until 110. So if we could get up there, we'd look at that as kind of one of the bigger plays. And these are the types of trades we wanted to find and identify for you today. And so watch for that one. Again, we need a rally. Remember, with everything we looked at today, all the markets, the currency markets, and gold and oil and everything, remember there are plenty of other levels, plenty of more levels on the smaller time frames. We typically cover those smaller time frames in short-term trading here, but I want to also incorporate, like I said earlier, some of the long-term stuff, and that's why I told you that story at the beginning of the session. Once you get a taste of one of these longer-term trades, you'll certainly want to incorporate them into what you're doing. It's a great way to do it. Okay, but hang on a second. Let me just pull this out. I put my email in the chat there. It's sseiden@tradingacademy.com. If you have any questions, comments, I really want to start the year off the right way. It's great to see everybody. We're going to make it a really strong year for you. And I'm going to do my best to make sure that you achieve your trading goals. And but again, this year we'll do plenty of short-term trading and short-term opportunities, but we want to incorporate the long-term too. It's all about trading is all about time and money, right? So let's be as efficient and as effective as we can. Great stuff. All right. Well, thanks. So thanks for showing up and spending time, and we'll see you next time. So again, sseiden@tradingacademy.com if you have any questions or comments, and we'll see you next time. You have a great day and have a great year. We'll do it together. All right. Thanks, everybody.